Nickel has a considerable number of uses and historically has been found in many areas of manufacture because it resists corrosion. But it seems to have come into its own recently as prices of the metal have just reached 6-year highs in the London Metals Exchange. What's behind the move? And more importantly, where's it going? Welcome to today's IG Trading the Markets podcast. I'm Jeremy Naylor. I'm talking now to Brad Mills, founder and managing director of Plinian Capital, which has interest in a number of companies that are mining nickel. Brad, welcome. I want to begin first of all with the straightforward question: why is nickel highly thought of at the moment?
Thanks, Jeremy. So what's going on today in the nickel market is a revolution in demand, and it's driven by the move to the electric vehicle ecology. And if we think about it today, about 2% of the world's annual vehicles are EV. Something like 5 million were in service throughout the world in 2020, with production of about 500,000 EV vehicles kind of globally. And so that's projected to go to 100% by 2030. So in 9 years, you're going to go from virtually zero to 100% of the world's motor vehicle fleet becoming electric. Each electric vehicle consumes about 55 kilograms of nickel in the battery systems. And so if that forecast is even halfway correct, it will double nickel consumption in 9 years. It'll take us from 2.4 million annual tons consumed today to something like 5 million by 2030. And we're seeing that exponential growth starting to hit the market going into 2021. Companies like Tesla are forecast in the next 2 years to go to 500,000 vehicles, and consumption going from 20,000 tons last year to 265,000 tons in 2025, just the one company. And so it's that anticipation of that massive new stimulus of demand and the lack of any real growth. In fact, the declining production side of nickel over the last 6 years. So a classic squeeze.
That's interesting. I mean, there's obviously a lot of demand coming through. I want to take a look at the demand-supply equation in just a minute in some more detail. But I want to ask you about the uses of it. You talked there about electric vehicles. We've known nickel as being part of the manufacturing process of a number of different areas for a number of different years. What else do we know nickel for pre-electric vehicles?
So the way that we see nickel in our daily lives is in stainless steel, and for most people that is in their kitchen. If you have stainless steel flatware, your eating utensils, if you have a washing machine, it's lined with a stainless steel inner liner, or a sink that's made out of stainless steel. Our refrigerators are often exteriors or stainless steel. Our stoves, our pans, our pots. So it's used in a wide variety of white goods in our homes. It's also used in a massive amount of manufacturing facilities that require corrosion resistance and sterile environments. So a simple one is brewing. If you want to make beer, you brew it in stainless steel vats, or bulk wine production, any kind of chemical process. So all varieties and uses of stainless steel is by far and away the largest use of nickel today, but it is used throughout the economy in a really wide variety of ways. It also goes into a wide variety of other alloys like brass and things that go into more decorative home uses or fittings. So a lot of pulls on doors and doorknobs are brass, which contain nickel for color and strength. So it's that variety of home use, but the core is stainless steel today, and that shift is adding this whole new leg, if you will, to demand that just never existed before.
Whereabouts in the world are the big reliable supplies for nickel at the moment? Where do we see the big resources?
There are really today three major sources of nickel. The nickel sulfide producers, which is the traditional way that nickel was mined. It was mined and smelted to produce nickel metal. The biggest producer in the world is Norilsk Nickel in Russia, and then Canada after that, which is principally the big mines that are currently owned by Vale, used to be owned by Inco in Sudbury, Canada. And then in the last 25 years, we've seen the development of the nickel laterite deposits, which are mostly in Indonesia. There's a few in other places like Australia and Madagascar, but by far the largest are in Indonesia. And the laterites are produced both through complicated chemical processes to make nickel metal, but starting about 15 years ago, started to be what we call direct shipping ore of iron nickel laterite ores to China, which were used in the direct production of nickel pig iron. And so the major growth in nickel units over the last sort of 15 years has been the rise of the Chinese nickel pig iron manufacturing, which skips making pure nickel metal and just produces a low-grade nickel iron ore and turns it directly into feedstock for stainless steel. And so it's today globally nickel sulfides, Canada and Russia, and the laterites coming out of Indonesia.
Now, you highlighted the areas of big and expected to be increased demand coming through from the electric vehicle, the new technologies that we all know and are beginning to love so much. Let's take a look at the supply side, because I get the feeling from what you said about the demand is that we're going to see some sort of deficit work up. Is that the case already, or is that going to happen? Or are there sufficient supplies coming online, do you think, to be able to meet the demand that's coming on from here?
It's a great question. So what's happened in the nickel market is it's a classic cyclical metal, and it was in the last big nickel boom that occurred in the 2004 to 2010 period, or 2008 period, before the global financial crisis. Nickel growth exploded, particularly on the back of Chinese infrastructure growth, and at one point got as high as $50 US dollars per pound. It collapsed in 2013 at the sort of the back end of the big boom in metals, and it's been on a 6-7 year low price period. And that low price period on the back of reduced Chinese demand, slow growth, and also very substantial growth in supply from the nickel pig iron I talked about, pushed prices down to, in some cases, almost down to $5 a pound. So we have this big, massive swing that's occurred between $50 a pound down to $5. And the impact of that is that it dried up a lot of the exploration. And in the last couple of years, we've also seen major closures of higher cost operations as they simply couldn't make an operating margin. And the most recent one is just in the last few months, we saw Vale close the largest nickel laterite metal producer at its Goro project, which was a 40,000 ton per year nameplate project, but was producing nickel at $10 a pound. So even in today's market, still would not have been making money. And so we've seen a steady erosion of production over the last sort of 5 years, and since the kind of the price collapse, and that's put static supply against now suddenly increased production, and that obviously supply demand fundamental has impacted and is more seriously starting to impact price in 2020, and we expect to accelerate that into 2021 and beyond.
So how do you see things moving on then in terms of the if I could put it, the politics of the metal, because China is now a dominant player in terms of ownership of resource. Is this the case on nickel as well? You mentioned China as one of the political components of the pricing earlier, but is it a dominant player in global resources these days in the nickel area?
So it is the world's biggest smelter of nickels. Norilsk Nickel and the Canadian nickel production are integrated through to metal, and they are on the nickel sulfide side. They are very big producers. We'll come back to them. The Chinese don't have any of their own nickel ore. They buy concentrates from other, both nickel sulfide, but increasingly over the last 10 years from the nickel laterite ores from the Philippines and from Indonesia. That is the subject of a lot of political wrangling, and particularly with the Indonesians. And the Indonesians introduced content or value-added content requirements in the last 5 years, and in fact stopped exporting nickel ore to China about 2 years ago. And with the demand that they move the nickel pig iron production from China to Indonesia. And that's about jobs, it's about value add and higher taxes, et cetera. And so that has curtailed the growth of nickel pig iron units, and curtailed it, in fact, as ore has become scarcer. And again, demand stumbled in 2020 with COVID. So you had this kind of big slowdown in the demand for stainless steel, which impacted the kind of the primary supply chain. And so there is this political element around the Indonesian government, which probably has about half of the world's nickel supply and probably 2/3 of the nickel resources, playing its nationalism card in a pretty serious way and forcing the Chinese manufacturers and smelters to move their facilities or build new facilities in Indonesia to produce those ores. So that is a big factor in supply side and constraint on supply side, because it now becomes much more capital intensive, and it slows down the growth of nickel units coming from the biggest source of nickel supply. Both Canada and the Russian sources are stable but flat. They really haven't changed or grown probably in 20 years, and they kind of stay very, very flat. And less subject to kind of political machinations. It's worth mentioning that one of the bifurcations and one of the pressures on nickel metal pricing is that the primary source for nickel metal is with the smelting of sulfide ores, which occur in, as I said, mainly in Canada and Russia. And the main source of nickel units going into stainless steel, it has been coming from the laterite ores out of Indonesia, which do not produce nickel metal, but produce nickel pig iron. And that nickel pig iron can't be used easily or converted to be used for electric cars. So it's almost 1 million tons a year of production is essentially not available for EV. And that's, again, one of the reasons you're seeing nickel metal price pressure in the current market.
Let's bring it all together and take a look at the price as things stand there at the moment. And as we've got at the top of the screen here, it says that nickel's at a 6-year high. We're just breaking the levels that we saw at the back end of last year. So 6-year high for nickel. What are the effects of all that you've been talking about going to be on the price as we look out from here on in, especially with that ramp up to the full adoption of electric vehicles?
So I think our expectation is that a certain amount of the price today is probably a little bit ahead of the supply demand fundamentals, and that we still have 240,000 tons of nickel inventory, metal inventory, and LME, and we haven't seen that kind of moving down very much in the last year. Again, there was definitely a pullback in demand in the COVID period. But if that nickel inventory starts to erode, then we would expect price to start to accelerate. The fundamental supply is in deficit to current demand forecast for 2021 and onward for at least the next 4 or 5 years, which basically means there's more primary demand at the current price than there is available nickel metal production planned. That should translate into progressively higher prices, which inevitably lead to capital allocation decisions, which increase production. But it takes probably 4 or 5 years. So we could be in for an interesting run on nickel price. And whether we repeat the $50,000 peak or not, I wouldn't be surprised to see it move considerably above where it is today over the next 2 years.
Interesting. Okay, we'll leave it there, but thanks indeed for joining us, Brad. It's Brad Mills. He is the founder and managing director of Pinion Capital. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.